Good morning, everybody. Good morning, everybody. I'd like to apologize for a late start. We just had a couple of technical hitches that we tried to sort out, and I think we're all ready to go. For those of you I don't know, my name is Gary Feldman, and I head up the NMG Healthcare Consulting business. And I thought it was important just to share a bit of an overview of what's happening in the industry going into 2025, because we have seen substantially higher than expected increases from some medical schemes. And I just wanted to take you through some of the information that we've got and we're sharing with you as our clients. So this morning, if there are any questions you have, please post them in the Q&A. And at the end of the session, Corin and I will address those questions. And if we don't get to all the questions, we will then basically respond in writing to the questions that you have posted. From today's perspective, I think it's important that we just basically look at the different environments. So I just have two slides on the high-level economic overview and what's happened in the economy over the last year. So fortunately, we've seen in the last 2 months that there's been a drop in the current repo rate, and that is good news for the consumers. Bond rates have come down, and I think ultimately that's positive. And we've seen also a drop in the inflation rate. Also very positive for South Africa is, as at today, we've had 246 days without load shedding, which is fantastic. I think we've almost forgotten about load shedding. And then also in October, the cost of fuel, be it petrol and diesel, has been the lowest since the Ukraine-Russia conflict. Yes, I do anticipate a slight increase in December, but ultimately the fuel price has come down over the last couple of months. So that is all looking good for the economy and its positive trends. Then there are one or two things that are looking down. And I think ultimately one of the big concerns for us in the economy is the rate of unemployment. The unemployment rate is very high, and specifically amongst our youth, we've got an unemployment rate of approximately 60%. And then the other concern in South Africa is, of course, our crime. Our crime stats have increased over the last year, and specifically over the last 10 years, you've seen there's a 77% increase in crime, while unfortunately the conviction rate is very low. So that just gives you a bit of an overview of our economy and what's happening in South Africa. We then want to just look at what's happening in the healthcare industry, and I think it will be unfair if I don't address the NHI situation. And I think this is a concern and a question that's on everybody's lips. What is happening with NHI? When will it start? What will it cover? Now, ladies and gentlemen, that is a question that is still very vague at this stage. The Minister of Health is confident that the first phase of the NHI will be rolled out in 2026, and they'll start contracting with various service providers. What NHI will cover is still not certain, and I think ultimately what NHI will be and how NHI will be funded is also even more uncertain at this stage. And I think these are the two biggest challenges that are facing the NHI: the funding and the benefit structure. There's not enough nurses, doctors, hospitals, infrastructure is not up to standard. And ultimately, this uncertainty is creating a lot of confusion and uncertainty from the private investment side. I mean, if you think about the 3 or 4 big hospital groups, are they going to carry on building hospitals if they're not sure how they're going to be contracted in the NHI environment? So those are concerns that are still around. What is positive is that the president has started engaging with private healthcare and has asked for input from the private healthcare sector, which is at least a positive sign that they are open to suggestions, which wasn't the case pre-election. If I then look at the funding of the NHI, and this is the biggest challenge that I think South Africa faces. We know that we are struggling financially. There's a deficit, and our interest rates and what it costs us to finance the government deficit is phenomenal. So if we look at current situation, the individual taxpayers, there are approximately 7 million registered taxpayers, and that generates about 600 odd billion rand. Then there are corporate taxes, that's just under 300 billion rand. And then you've got VAT, that is about 400 odd billion rand. So that is basically what is currently raised. But then we need an additional 200 billion rand to fund the NHI. And ultimately, there are 3 ways of raising this 200 billion rand. The first is to increase your personal income tax by 31%, which, as you know, we're a fairly high tax-paying society already. I think that's basically going to be a death shot for the individual if our taxes have to go up by 31%. Then if you have to increase VAT, that will be a 6.5% increase on VAT. And that will take VAT from 15% to 21.5%, which will make a lot of things unaffordable to the population as well. And then the last thing, as employers, which is a concern to the employer, is really if they have to increase a tax, payroll tax, and that will be a UIF tax will be have to increase by approximately 10 times to fund this additional 200 billion rand. So that it's one of those three alternatives or a combination of the three which potentially have to be implemented to fund the NHI. And I think that is a concern in an economy that is struggling already to make sure that we can collect that from the government perspective. If I then look at what the impact is on people that are currently enjoying the private healthcare benefits, so if you increase the 31% taxes, ultimately what that means is there will be a 69% less funding for the healthcare. So currently what is happening is, if you look at the government expenditure on public health at the moment, it equates to approximately 407 Rand of benefit per person. If you look at what currently we are contributing as private healthcare members, it equates to approximately 2,300 Rand that is spent on each individual in the private healthcare state. Now, as you know, that is predominantly due to contributions that are paid to medical schemes. So if they had to basically take that, the additional, the 9 million people that are currently on private healthcare, and you increase the billing of the tax of 200 billion, it means that you and I, the benefits will drop by 69%. So we'll only get benefits to the value of 714 Rand per person in the NHI environment, which is a huge concern. And I think that is where the NHI has been challenged constitutionally, because ultimately Constitution says that if you take away something from somebody and you don't allow them to have private healthcare, private medical scheme, you've got to offer them something equal to or better than what they've currently got. Now, we know that the NHI also says that private healthcare, private medical schemes as they are known now, will not be able to exist in their current format when NHI is fully implemented. They will only be able to offer benefits that are not offered by NHI. Therefore, it will not be equal to or better. And I think that is one of the challenges that the government is facing as well regarding the NHI. So that's just a bit of an overview and an update on the NHI. From our perspective, and I think ultimately what everybody says is, don't make any changes to your private healthcare in the interim. We believe that NHI, if it will ever be implemented, will be another 15 years down the line when it's fully implemented. And that's when medical schemes will probably not be able to exist in the current format. So please, I think we all do support universal healthcare for all South African citizens, but it's not something that's going to happen overnight. And for those people that do have access to private healthcare, our recommendation is to retain that and do not drop that. I mean, that is one thing that was also mentioned pre-election, is don't worry, post-election there will be NHI, and you can cancel your medical scheme. So please don't cancel a medical scheme, stay on your medical scheme. That's just an update on NHI. I think then if we look at the medical scheme increases going into 2025, we've seen that these are substantially higher than CPI. And that is a huge concern to employers and ultimately to members, because employers are giving increases related to CPI, and it means that the employees are getting poorer and poorer just on the medical scheme contributions. If you look at those medical scheme contributions, the average is approximately 9.7%, and varying from an 8.9% right up to a 13.8% on CISWE. We're going to talk a bit more about that, but that just gives you the open medical scheme environment. And those are your largest medical schemes in South Africa. There are a couple of small ones which we'll address in a couple of minutes as well. If I then look at why are contributions increases above CPI, and I think this is an important point to address, because we know there, as I said, that CPI is 4.5%, 5%, but we saw that the average is 9.7%. And the couple of reasons for this is the following. Firstly, healthcare providers. We know that doctors, specialists, hospitals are charging on average 6% more than basically what they charged the previous year. The other big driver is new technology. Basically, if you look at things like robotic surgery, specialized medication, those enhancements are costing more than an increase of the CPI. And then I think what we've seen is more claims coming in. So ultimately, yes, we know that there's a much higher occurrence of cancer, of other diseases that have come back, and also claims have gone back to pre-COVID levels. So ultimately, more and more claims coming through. And then also, medical schemes are not allowed to negotiate with providers on specific environments. So that, you'll remember in 2019, there was the health market inquiry, and ultimately they said there's certain guidelines that private medical schemes cannot engage with, and ultimately they must pay what the providers are requiring and requesting. And then also imported products. As we know, imported products like technology, medication are all paid in dollars, and with the devaluation of the rand, that is a driver of costs above CPI. So those are the main reasons why medical scheme contributions are increasing faster than CPI. An important point to look at is medical scheme options increase at different levels. And you can see here, we saw that the average was 9.7% on 2 slides ago. But if you go and look at each one of the medical schemes, the increases are dependent on which option you are on. So if you're on Discovery, we know that the average was basically 9.9, but some of the options have gone up by 10.9 versus a low of 7.4. And similarly, you can see there on, for argument's sake, FedHealth, there's a huge drop and differentiation in their options. And every single one of the schemes has differentiation in the options. And basically, the reason for that is the following. Each option has got to operate in its own. The Medical Schemes Act says that each option must basically support itself. There can't be cross-subsidization between options on a medical scheme. So if the comprehensive plan, where traditionally your higher claimers go, is running at a deficit, it can't cross-subsidization from a surplus from a core hospital plan, which is running at a surplus. And I think ultimately that is one of the key drivers. Claims experience. So basically, people are adjusting their option to their claims. So if I'm not a claimant and I am prepared to fund my day-to-day expenses out of my pocket, I'm happy to go to a core hospital plan. And therefore, everybody like me goes to a core hospital plan, which runs at a surplus, while a comprehensive plan where everybody's got high claims will go, and that one runs at a deficit. So the claims experience per plan also has an impact on the increase on that plan. And then low claiming members, as I said, will only go to options that suit their needs, and therefore basically like-minded people will use those options and they have lower contribution increases. Ultimately, if you think about it, people will only go to option more comprehensive if they need that, and that is a driver as well of higher utilization on those higher options. And as I said, there's cross-subsidization is not allowed, and ultimately you will choose the option that you best suited to. So this is why you see across one medical scheme, the different options have different increases going into the following year, and this happens year on year. What we then do is look at medical inflation around the world, and this is medical inflation is over and above the normal inflation. And so I'm still happy to say that South African medical inflation is one of the lowest in the world over and above normal inflation. And that's why you see in South Africa, medical inflation is around about 9%, because we know CPI is approximately 4%, 4.5%, and then medical inflation is running at 4.5%. So that is why your medical scheme contributions are going up by 9% plus, to basically make a provision for the medical inflation. So that is a bit of background on the healthcare industry. Now we're going to look at comparing the medical schemes. I think it's important for us and to share information with you around the sustainability of medical schemes. And this is why we recommend certain medical schemes versus others. This is an analysis that we do. We take the various medical scheme financial statements, and these are from the Council of Medical Schemes report, which gets released every year. And often people say to me, but this is a year in arrears. They're absolutely right. The Council of Medical Schemes requires that every medical scheme has to submit financials by June following the benefit year. So the benefit year runs from 1 January to 31 December. So this is the benefit year that ran 2023, as at the 31 December 2023. This is the financial statements that gets used, and ultimately, based on that, we analyze the financials and some key indicators on any one of the financials. So we want to look at some of these trends in the market, and ultimately what we do, look at these financial statements as at 31 December. In this report and this presentation, we really looked at the largest non-medical schemes and what are their key criteria are to ensure that we give advice and ultimately ensure that you are giving your staff and your own membership on a medical scheme that is going to be sustainable in the long term. So if I look at these medical schemes and the medical scheme environment, as I said in my previous slide, we're addressing 9 medical schemes here. There are only 16 medical schemes in the open medical scheme environment that are still basically registered at the moment. If you go back to 2000, there were 47 open medical schemes. And ultimately, if you look at the sustainability of medical schemes, you've seen some medical schemes liquidate, some medical schemes merge with medical schemes, and that is why you've seen medical scheme numbers more than half over the last 23 years. And if you look at the restricted medical scheme market, and the restricted medical scheme, just for clarity purposes, that is employer schemes, and the largest restricted medical scheme in South Africa is the government employee medical schemes. So that is a medical scheme that only government employees can access. And if you're not a government employee, you can't access that. So that's the largest. And then you've got a number of the larger corporates that have got their own medical scheme. Even there, you've seen a reduction from 97 medical schemes in 2000, and currently there are 55 corporate or restricted medical schemes that are still available in the market. So the medical scheme, number of medical schemes has declined over a period of time. But what has happened to the membership of the medical schemes? And that has remained fairly consistent. So there's been relatively unchanged. You'll see then 2007, there was quite a big increase, and that is when GEMS was launched. And you can see how GEMS grew up, the top little blue mark there. So there are just over 2 million GEMS members at the moment. And then there are 2 million people that are on the restricted medical schemes. And then there are just under 5 million people on open medical schemes. But the last 3 or 4 years, the membership has remained fairly constant. And ultimately, it's just because new members are not joining, young people are staying away from medical schemes, and older people are unfortunately having to stop their membership due to affordability. So if I look at the key criteria that we want to look at on these medical scheme members, we look at the size of these medical schemes, and these 10 medical schemes cover 80 or 90% of the market. If you look at Discovery, has got 58% of the market, which is a dominant player. And you can see they're basically 3 times or 4 times larger than the next largest medical scheme, which is Bonitas. And as you can see there, from a size perspective, from Discovery right down to Key Health at 34,000. Now, that is a sharp drop in numbers if you even look at the top 10. And if you look at the other 8, I mean, they're all smaller than 34,000 members. And therefore, we are concerned about those medical schemes. And it's not saying that they're bad medical schemes, but if a medical scheme like that has to get 1 or 2 large claims, they could suffer financially and could have an impact on the ability to pay claims going forward. If you look at membership growth, it's been stagnant, as I said earlier on. In 2023, there was a decline in membership across the medical schemes. And ultimately, I think it's that growth has been very slow over the last 10 years, really, from 2007 when GEMS was launched. That's the only growth that was really seen. So if I look at the average age in the industry, and this is an important point, Why average age is so important in the medical scheme is, as you get older, we traditionally find that claims go up. So average age of the medical scheme is very important. And you can see there from 2019, the average age of the medical scheme industry grew from 35 to 37. So it does mean that some young lives have come on, because that's basically 5 years. And in that 5 years, the average age has only gone about 2 years. So it's definitely meant that there's some young members have come onto the medical schemes. Older members definitely increase in claims. And I mean, our actuarial modeling shows there that for every year you're older, your average claims goes up by approximately 2 to 3%. So that is why it's so important to bring young, healthy lives into the industry. And I think that is one of the points that private healthcare said to government is, make medical scheme membership compulsory for all employed South Africans, formerly employed South Africans. And if you have all formerly employed South Africans on some form of a medical scheme, you'll bring the average age down, which will bring the cost of medical schemes down, which will make it more affordable to the South African population, which will then remove the necessity of the public health to a large extent. So that is really a recommendation that was put forward by private healthcare specialists to make membership of medical schemes compulsory for all formerly employed medical scheme members. And that is to drive down the average age ultimately. Hand in hand with the average age goes the pensioner ratio. Now, pensioner ratios are also very important because that shows the percentage of the membership that are pensioners. And ultimately, the higher your pensioner ratio, the higher your average age is, and the higher your claims go up. And that has an impact on the long-term sustainability of a medical scheme. And you can see from this slide that the average pensioner ratio is just over 13% in 2023. And so that is basically highlighting that there are 3 or 4 medical schemes that are got fairly high average pension ratios, with FedHealth having a pension ratio of 23%, which does mean that FedHealth contributions have gone up, and we saw that in the increases this year specifically, and also it impacts on reserving of the medical scheme, which we'll address in the next couple of slides. So ultimately, I think it's important to make sure that when we compare medical schemes is to look at average age and pensioner ratios to see what their claims ratio should be and would be going forward. The other important point, and this is a legislative requirement, is that every medical scheme has to retain 25% of its contributions in reserves. And that is basically saying it's got to have a 25% solvency ratio. So of every contribution that we make, 25% of that must be held in reserves to ensure that there is funds available to pay claims. And if you look at the slide, you can see there that the average solvency ratios in 2023 was 37%, and that's that yellow line across the slide. And you can see there that most of the medical schemes are above that average. And basically 8 out of the 10 medical schemes have achieved the required solvency level. So that is that they've got solvency above the 25%. The 2 that are below the 25% are basically MediHelp and Sizwe. And I think ultimately, if you look at the pricing over the last couple of years, which we'll address now, you'll see that their pricing modeling has resulted in a slow build of reserves over a period of time. And ultimately, if you look at some of these schemes that reserves have dropped from 2022 into 2023, that could be also budgeted for, because a medical scheme traditionally budgets for break even, unless, as I said, they've either got excessive reserves or the reserving level is below the required 25%. Because a medical scheme is a not-for-profit organization. So they are not making profits or losses. They are either making surpluses or they're running at deficits. And if they continuously run at a deficit, it impacts on their solvency and the reserving level. If they continuously run at a surplus, it means that they're building reserves, and you don't need to keep much more than the 25% from a required level in your reserving level. So ultimately, most medical schemes if their reserving level is right, they will budget for a break even rather than a surplus or a deficit. So if, for argument's sake, if I look at a Discovery whose reserves you can see they dropped from 2022 to 2023, that was budgeted, and you'll remember that they delayed their contribution increases in 2023 because they wanted to use some of the reserves that had grown during COVID for subsidizing the reserves, for subsidizing the contributions for the first couple of months of 2023. And that is why the reserving level dropped in a Discovery, for argument's sake. And each one of those medical schemes, if you go and analyze them in more detail, you can see that there were reasons for medical schemes reserving level to drop. So that's an important point. And Sizwe, which currently at the end of 2023 was at a reserving level of 15% is very concerning, and the Council of Medical Scheme has taken corrective action there and has put them under supervisory management to make sure that they can address that shortfall and how they can put a business plan forward to bring their reserving level up to the required 25%. So that is a focus area, and that is where the Council of Medical Schemes plays a role to make sure that the medical schemes adhere to required levels of reserving specifically. The important point here is also to look at claims versus utilization and what your utilization ratios are. Now, most of medical scheme members will say, well, if I'm claiming less than 100%, then the medical scheme is making money off me and I'm losing money. So that's not exactly true, because ultimately your contribution is there. Yes, it's there to number one, give you cover. Number two is to make sure that in case of a large claim, you land up in an accident or you get very ill and you have a claim of a couple of million. So it's a form of insurance as well. So basically, you can't or shouldn't be able to claim 100% of your contribution every year, because the medical scheme also has some costs that they have to carry, administrative costs, and they pay an administration because, as I mentioned earlier on, the medical schemes are not-for-profit entity. So then people are saying, yeah, but how does a Momentum or a Discovery or listed organizations make these profits? So Discovery Pty Limited, as you know, in the stock exchange, is the administrator for, amongst other, Discovery. They also administer a host of other medical schemes, but they earn an administration fee of the medical schemes. And that is one line of revenue that is generated by Discovery, the listed organization. So what we see is that if you are claiming on average between 90 and 92% of your contributions, it's a win-win for the medical scheme and for you as a medical scheme member, because it costs between 7 and 10% to run a medical scheme and all the costs that they have to incur to run a medical scheme. So once again, coming back for a break even, if your claims are running at 90 to 92%, and that happens to all the medical scheme members, then it will be a break even, because ultimately there shouldn't be any additional cost. But then you've got, unfortunately, ill people who claim more than the 92%, and that is where the cross-subsidization comes in. So at a 92% claims ratio, the scheme is running at basically a break even. And you can see there that some of the medical schemes are running below that, and ultimately that has resulted in a growth in reserves, which is ultimately there to support you as a member. And a lot of people say, well, what happens to those reserves? So if, for whatever reasons, say now in 15 years' time, NHI gets implemented fully and the medical schemes are not allowed to operate in the current format, or they have to cease and they've got to restructure a benefit, those reserves belong to the members of the medical schemes, and they'll have to work out some form of an actuarial model to pay back those reserves to the members at the time of a scheme basically being disbanded. But that we don't anticipate, and it doesn't ever happen. But those reserves belong to the members. It doesn't belong to anybody else. And you might have read in the press that the government or some of the parties that are supporting NHI said, well, government must take the reserves from the private medical schemes. Now that won't be allowed. I mean, the Medical Schemes Act clearly protects those reserves. It's the members' money, and nobody will be able to take that away from the members. The first and foremost, it's got to get paid back to the members unless the members agreed for it to be paid across to some other party. And that is why when you see two medical schemes merging, the members have to vote that they are comfortable that the medical schemes merge. And depending on the medical scheme's rules at that time, which are merging, it's going to be usually 50% plus. They've got to vote in favor of that taking place. So those reserves, as we're speaking about here now, are in the hands of the members. And ultimately, we're looking here at utilization, which if it goes beyond 100%, then there are concerns. And that's why you see there, I mean, CSWA's reserving levels drop because one of the reasons probably is their utilization has gone up over 100%, and MediHelp as well. You saw there that their reserves have dropped as well. So as soon as your utilization goes up too high, then your reserving levels do drop over a period of time. Please, if you do have any questions, just a reminder, put them in the Q&A, and Corin will address them, and we will try and respond to them at the end of the session. So what are the contribution increases looking like over the period of time? And ultimately, in 2021, contribution increases were lower, and that was really due to COVID. 2022, medical schemes offered some relief. And then in 2024, we saw that medical schemes had to return to normal increases because we saw that claims went through the levels of pre-COVID. And ultimately, you can see there that the 4-year average increases were lower than the 2024 increases. And that once again just highlights the fact that medical schemes have to increase their contributions to make sure that they remain sustainable in the long term. And therefore, we do look at almost a corridor of certainty to make sure that the increases are not 3% one year and 15% the following year. So you try and get some form of consistency of increases over a period of time, because that means that the scheme is run well, claims are under control, and ultimately that gives you comfort that you're not going to get any unexpected shocks going into the following benefit year. So if you look at the contribution increases, and as I said, CSWA, if you look at their increases on that, the gray line that's below the CPI plus 3, has resulted, unfortunately, over a period of time that the reserving levels have dropped quite dramatically. And you can see there, FedHealth and MediHelp. Number one, FedHealth high average age. MediHelp had low increases a couple of years, and ultimately, once again, had to have above CPI plus 3% increases. While the other increases, other medical schemes increases have followed CPI plus 3 generally over the last 10 years. And it gives you that, once again, that comfort that as long as medical scheme increases grow by CPI plus 3, which is the medical inflation, then your scheme should be sustainable, and there shouldn't be any unexpected announcements of interim increases, of benefit cuts, etc. So this gives you a trend over a period of time of the increases of these medical schemes. And then one of the last criteria that we'll be looking at is the financial results of a medical scheme. As I said, a medical scheme will budget to break even unless there's a specific need to budget for a surplus or a deficit. So you can see here in 2023, the benefit year of 2023, the net healthcare results on all medical schemes were in a deficit. Okay, the deficit was basically running around 6.8%. That was what the medical schemes were running at there. The only medical scheme that ran at a surplus was Umvuzo. And once again, I mean, Umvuzo is a scheme that has done well over the last couple of years, a smaller scheme, but has done well. And it's a semi-restricted medical scheme. It's an industry-related medical scheme. So not anybody and everybody can join Umvuzo. So it's almost a hybrid between an open and a restricted medical scheme for specific industries. If you look at the deficits here that took place in 2023, you can see most of them were slightly higher than 2022, or larger deficits. And ultimately that is because claims started getting back to normal rates. And if you look at the next slide, which is your net deficit. Now, as I mentioned earlier on, each medical scheme is required to retain 25% of contributions in a surplus, in their reserves. Now, those reserves have got very strict guidelines where they can be invested, and that investment income generated from those reserves is added to your net healthcare result. So you can see there that the deficits are somewhat less in net of investment returns. And basically, once again, you can see there that a couple of the medical schemes in 2023 started showing small surpluses and or very small deficits. So the average deficit after investment income is a negative 1.9%. So you can see there, I mean, if you look at the previous slide, it went from a negative 6.8% to a negative 1.9%. And that is as a result of the investment returns that the medical schemes could add to their net results. So once again, I think that just shows there that medical schemes must manage reserves, must manage claims, and ultimately, once we take all these key criteria that we evaluate and we put it on a dashboard, it really shows us a dashboard of these results. Now, this is what we also then call a heat map. And so it's basically, if it's a dark green, then it's a very good position to be in. If it's a red, doesn't mean it's bad, but it does mean that it's a weaker area, because I'm confident to say that none of these medical schemes are going to close down this year, but they might have some areas that we're watching very closely or we're concerned about. And specifically, if you look at the size, I mean, so the Discovery is your largest and Key Health is your smallest. But Key Health, as I said, not necessarily a bad scheme, but it gets on the rating of our heat map, it is the smallest of the schemes. So that's why it's more closer to red. And similarly, if you look at the net healthcare results, if it's basically a large negative, then it is red, and if it's a smaller negative, then it's not as bright a red, and you can see the Mvuzo as a positive. So we basically look at these criteria, and ultimately that forms part of our evaluation criteria when we engage with our corporate clients, because from a corporate client perspective, it's much more difficult to move a group of members from one medical scheme to another. Whereas if an individual is on a medical scheme and that medical scheme starts showing cracks, it's much quicker and easier to move as an individual. And that's why this evaluation plays a much bigger role in the corporate space, where decision makers have got to evaluate medical schemes rather than individuals. And you can look at that. Let me use an example like FedHealth, who's got quite a couple of reds. Now, FedHealth, yes, has got a couple of issues that they are addressing, and they have got a strategy in place. So I'm not saying you've got to move off FedHealth today, but we would discuss some of the elements on FedHealth which are play an important role in the decision-making process, versus a Momentum which has got one red and two yellows and the others are all green. So those are the key criteria that we use to assess medical schemes, and basically helps us to inform our clients regarding the medical schemes. Once we've identified the medical scheme, then we start looking at the benefits and the contributions, because ultimately that is the next step that a person needs to use when they're making a decision. And I think, what should members do? If you're not sure, please engage with your NMG consultant. I think that's important. We've got all this information. This, as I said, is a presentation that has taken me 45 minutes to do, but this is backed up by a large amount of research and evaluation that we do. We've got spreadsheets, and we've got basically tools that can help you identify a plan on a medical scheme that is most suitable to your needs. And ultimately, that's why it's important to engage with your consultant, and then ensure that you're on the most suitable plan. And that is why, I mean, you don't want to be on a comprehensive plan if you don't need it, because the comprehensive plans traditionally have high increases due to the fact that people are there because they use those benefits and they need those benefits, and claims ratios are higher in those plans. And ultimately, it's making sure that you're on the most suitable plan for your needs. Yes, I mean, a lot of people have got very high needs. I mean, they've got high claims, but unfortunately cannot afford comprehensive plans. And that is also understandable and an unfortunate situation to be in. But if you are in a fortunate position that your claims are not that high, make sure you're on a suitable plan. And when I talk about suitable plans, we've seen the biggest cost curtailment in the network type plans. So if you are happy with networks and networks of providers being which hospitals you go to, which doctors you see, there are doctor networks, there are hospital networks, and even where you can, on some medical schemes, where you access your chronic medication, can also have an impact on the contribution rate that you do pay. So it's important to evaluate if you're comfortable with a network of doctors, a network of hospitals, and that might be a huge saving to you on your contribution levels. And then also, lastly, it's important to ensure that you've got comprehensive cover by adding gap cover. And gap cover is there specifically, for those who don't know, is during hospitalization times where providers within hospitals, your surgeons, your anesthetists, charge more than what your medical scheme pays, and you could have a shortfall, and gap cover can make good that shortfall for in-hospital specifically. And gap cover doesn't cover day-to-day benefits. So if you go to see your GP and he charges you more than what the scheme covers, unfortunately, gap cover won't cover that. But there are specifically for in-hospital and a couple of other benefits that gap cover, depends which gap cover product you take, does have some additional benefits, like, for argument's sake, pays for co-payments, for MRI, CT scans, for when you use a hospital that's not in your network. It can, some of the gap cover products cover that. So there's a range of gap cover products as well, which we at NMG do offer our clients and are more than happy to assist you with that. Ladies and gentlemen, that is my presentation for this morning. I'm now going to just ask Karen if she has got any questions that anybody has put in the Q&A, and then we see if we can address them now. Karen, do you have anything?
Gary, thank you for an informative presentation. We actually don't have any questions, so I think you've addressed most of the information that they needed to hear. So thank you so much. And of course, as Gary said earlier, if you do have questions following this session, please reach out to your consultants. We're very comfortable to provide you with the answers that you're looking for. And of course, we are going to be sharing the recording of this presentation with you. Thank you, Gary. Over to you.
Yeah, thanks very much, Karen. Yeah, ladies and gentlemen, thank you very much for your time this morning. As I said, I do apologize for the 5-minute late start due to IT technical issues. But once again, from my side, I'd like to thank you for our partnership this year. And I'd like to wish you all the best for the festive season and for the holiday season. And I think most important, just stay safe, travel. If you're traveling, be safe, be careful. And hopefully we'll be able to engage in the new year again. And thank you very much, and all the best to everybody. Thanks, Karen. Thank you very much, everybody. Bye-bye.